Hi everyone, welcome back to the channel. Today we're going to talk about IREN stock, which has been on a wild ride over the past few sessions. After a sharp sell-off last Friday and a powerful rebound on Monday, IREN added again on Tuesday, closing the day at $46.93 per share, up $1 or about 2.18%. It's been a classic high-growth stock roller coaster, sharp moves down, sharp moves up, but through it all the bigger story hasn't changed. In this video we'll unpack what likely drove Tuesday's move, how it fits into the stock's recent price action, and why the larger thesis around IREN's AI cloud pivot and mining cash flows gives the name a longer-term appeal even when the day-to-day swings get messy. Let's start by setting the stage. Last Friday, IREN fell 9.5% after JP Morgan downgraded the stock to underweight with a $24 price target. That call raised valuation concerns after a huge run from under $10 to over $44 in less than a year. The downgrade triggered profit-taking and shook out weak hands. Then on Monday, without any new operational news, IREN rebounded nearly 10%, closing at $45.93. That bounce reflected dip buying, short covering, and renewed confidence in the bullish story. Now, on Tuesday, the stock tacked on another 2.18%, finishing at $46.93. This is a textbook pattern you see in volatile high-growth names: big dip, strong rebound, then a follow-through day as buyers regain control. There wasn't a single breaking news catalyst unique to Tuesday that explained the move. Instead, it was the reassertion of the same forces that powered Monday's rally: buyers stepping in at support, shorts covering, and investors digesting a series of bullish analyst reports about IREN's transformation from a crypto miner into an AI infrastructure provider. Bernstein's price target jump to $75 is still circulating widely in financial media. Arete researches by initiation is still fresh. Articles on IREN's GPU fleet doubling and AI cloud ARR target are being shared on social media. In other words, the bullish narrative has re-emerged after Friday's bearish headline faded. To understand why that narrative has so much pull, we need to revisit what IREN actually is today. For years, it was primarily known as a Bitcoin miner. It built a large base of renewable power to mine crypto at scale. That business produced cash flow, but it also tied the company's fortunes to Bitcoin prices and energy costs. Over the past year, management has been executing a pivot to become an AI cloud infrastructure provider. They've ordered and are energizing roughly 23,000 GPUs, including Nvidia's latest B200B300 Blackwell chips and AMD's MI350XS. This is a massive expansion, about $674 million in capital spend, aimed at capturing demand from artificial intelligence workloads and cloud customers. Management has guided for more than $500 million in annualized run rate revenue from the AI cloud segment by the first quarter of 2026. That's a tangible near-term target, not a vague promise. Being a Nvidia Preferred Partner means IREN has priority access to scarce GPUs, which not only differentiates it from competitors but also gives customers confidence that the capacity will actually be delivered. All of this helps investors start to value IREN as more than a commodity miner. They see it as a hybrid AI crypto infrastructure company with cash flow support and hypergrowth potential. Meanwhile, the Bitcoin mining operation hasn't gone away. In August, IREN mined 668 BTC, producing around $51 million in hardware profit. That cash flow helps finance the AI build-out with minimal dilution. The company also secured $200 million in non-dilutive financing to support its growth plans. Together, these moves create a dual engine: steady mining profits and a hypergrowth AI segment. This dual engine is what has attracted bullish analysts like Bernstein and Arete. Bernstein's $75 target implies significant upside from current levels. Arete's by initiation highlights IREN's unique positioning as a supplier of scarce AI compute capacity. These positive calls have put IREN on the radar of institutional investors who may not have looked at it before. When a name with a strong story gets high profile by ratings, it can create a virtuous cycle of inflows and momentum. That's the backdrop for Tuesday's move. After Friday's downgrade and sell-off, Monday's big bounce signaled that support around $40 to $42 was holding. Tuesday's 2.18% gain was the follow-through, confirmation that buyers are still in control. In the language of technical analysis, it's a confirmation day. It doesn't guarantee a new uptrend, but it increases the odds. Volume wasn't as high as Monday's, but it was solid enough to suggest real buying interest rather than just a low-volume drift higher. Short interest is still estimated around 10 to 12% of the float. That's enough to create squeezes both up and down. When the stock fell on Friday, shorts likely pressed their bets. When it rebounded Monday, they had to cover, which added fuel. Tuesday's gain may have included additional covering plus momentum players adding to positions. Options flow has also been heavily call-biased. As the stock recovered, some of that premium was re-established, which can reinforce upward moves. Technically, the stock is now back near the $47 to $50 zone that acted as resistance last week. That's the next battleground. If IREN can break and hold above $50 with volume, it could open the door to the $60 to $75 range that analysts like Bernstein are targeting. On the downside, a failure to hold $44 to $45 on another test would signal a return to the choppy consolidation zone. For traders, those are the key levels to watch. There are, of course, risks. Execution risk is the biggest. Owning 23,000 GPUs is one thing. Monetizing them at high utilization rates with paying customers is another. If customer ramp-up is slower than expected, the $500 million ARR target could slip. Power costs and grid stability are also critical. Running that many GPUs requires enormous, reliable energy supplies. Any disruptions or cost increases could pressure margins. And valuation is always a risk. Even after Friday's dip, the stock is up massively year-to-date and trades at a premium to traditional miners. If sentiment shifts or the broader market sells off, pullbacks can be swift. But the counter-argument, and the reason so many investors keep coming back, is that the upside remains enormous if IREN executes. The dual-engine model of mining plus AI cloud gives it cash flow support and a hyper-growth segment at the same time. If management delivers even close to that $500 million ARR target by 2026, today's prices could still look cheap. That's why you see such a wide gap between bullish and bearish analyst targets. The bulls are valuing IREN like a high-growth infrastructure play. The bears are valuing it like a volatile miner. So how do you turn Tuesday's modest gain into an evergreen video? The key is to frame the daily move as part of a larger pattern. Start by recapping the price action: Friday's 9.5% drop on a downgrade, Monday's 9.7% rebound on dip buying and short covering, Tuesday's 2.18% follow-through to $46.93. Then zoom out to the big thesis: IREN's transformation into an AI cloud infrastructure provider, the GPU expansion, the Nvidia partnership, the mining cash flow. Explain how these fundamentals make the stock attractive even amid volatility. Highlight the technical levels: support at $40 to $42, resistance at $50, as markers for the next move. And pose the key question: is IREN building a base for a breakout above $50, or just bouncing within a range? This approach makes your video timely, because you're discussing Tuesday's actual move, but also evergreen. New viewers can watch it later and still get value from the explanation of IREN's business model, its catalysts, its risks, and its technical levels. By weaving the daily update into the larger story, you create content that educates as well as informs. Wrapping up, Tuesday's 2.18% gain to $46.93 was less about a fresh headline and more about confirmation. It confirmed that Friday's sell-off didn't break the bullish narrative. It confirmed that buyers are still stepping in on dips. And it confirmed that the market still sees IREN as a leading hybrid play on AI infrastructure and crypto mining. For long-term investors, the key is to focus on execution and fundamentals rather than day-to-day noise. For traders, the key is to respect the technical levels and be ready for volatility. And for everyone, the big picture is that IREN is in the midst of a re-rating from a crypto miner to an AI infrastructure leader. That's the story that matters, and that's the story you can keep telling even as the stock swings around in the short term. Thanks for watching. If you found this analysis useful, don't forget to like the video, subscribe to the channel, and leave your thoughts in the comments. Do you think IREN is building a base for a breakout above $50, or are we still in a choppy consolidation? Let me know below.